When I was learning about real estate, I almost thought real estate was illegal at first, because when you are coming from a background like I was coming from, where you're not studying tax in college, but then you're now working in a high level tax and accounting firm, and then seeing people make all types of money and not pay any taxes on it, you almost look at it like it's not legal. But then I realized there's this thing called depreciation that the government gives you. And depreciation in our tax office, we call it hidden gold.
Karlton, thank you for joining me for our Thought Leader Spotlight series. I'm your host, Matt Camp, head of partnerships for DealMachine. And on these, we really like to shine a spotlight on industry experts like yourself to hear your inspiring stories and help have our audience educated by what you see going on in the world. So really excited to have on Karlton Dennis today. I know you're a licensed tax strategist in all 50 states, and you help real estate investors reduce your tax bill. And then on top of that, you're putting out a ton of amazing content. You got a great YouTube channel. You're super active on social media, all platforms. You are a global keynote speaker, and you're a real estate investor yourself. So I'm really excited to have you on today.
Hey, Matt, thank you so much. And I appreciate the introduction. I'm happy to be here and happy to share value with your audience.
Yeah, I mean, to start, I'd love to hear a little bit more about your personal journey and how you got into real estate, and especially how you ended up specializing in helping real estate investors. That'd be great to start there.
Yeah. So I had a really interesting background. My mother has been a tax accountant in her entire life. So I grew up working inside of her tax and accounting firm, and I started out just really picking up staples off the ground, doing very mundane tasks. And then eventually I got on the phone to talk with some of these business owners and real estate investors at the age of 15 and 16. So I started learning a little bit about money at an early age. Went on to college, played football, graduated, got a career in sales, and then decided I wanted to take my sales skills and develop a sales process inside of my mother's company to teach her how to sell tax planning. And that's what I did. Fast forward to now, I've been doing tax planning for a little over 8 years, and I'm a real estate investor myself. And our firm primarily focuses on tax strategy for small basic business owners and rental real estate investors. So I have a lot of fun on YouTube and on these various different social channels, being able to educate the taxpayer, but mainly trying to turn taxes into a sexy topic because it has been viewed as a boring topic over the past couple of years.
Yeah. I mean, I'd love to hear your background, that it was in the family, and that you've been sounds like pretty driven from a young age. So that's fun, man. But one thing, and you said you played football in college. Do you think your experience in athletics there, in fitness and football specifically, contributed to your success in your career? Like, how do you think that prepared you for what you're doing now?
Oh, yeah, without a doubt. I mean, football was one of those things where you're just waking up, sacrificing, and you're on this like strict schedule every single day. And then when I got out of football, I kind of lost that disciplineness because I didn't have something I was showing up to every single day. And so when I jumped into sales, it gave me motivation. You kind of had to go out and get your own dinner per se when you're in sales. And so it sparked me. But then I realized when I was at this point in my career, 21 years old, I was working for a really great company at the time coming out of college, but I was working for a family-owned company selling wine and alcohol and spirits and things of that nature. And I was learning a lot about business, but I was working for a family-owned company and not my mother's own family-owned company. So the light bulb started going off in my head. Like, if I have all this skill set, I'm going to continue to make this family rich, right? Which is great, and I'll benefit from it. But I could also parlay some of my skill set into my mother's company and just figure things out. And so that's when I made that transition. I joined her company. And to be completely honest, when I was working in the first 5 to 6 months of her company, I was actually working on my side business. I was a personal trainer in college, which was something I did a little bit under the table because the NCAA doesn't really allow for you to have a scholarship and for you to be making money while you're in college. So I was personal training some people. And I said, you know what, as I get into the sales role, I'll continue my personal training business. Well, when I joined my mother's firm and decided to create a sales process inside her firm, I still had my personal training business. And I actually was really passionate about that for the first 5 to 6 months. It wasn't until going to one of my first speaking events of my mother's, where I got to hear her speak, was when things started to change. I was in an auditorium of 150 investors at the Apartment Owners Association. All of these investors were walking around in flip-flops because they're just sitting on real estate. They didn't have to worry about dressing up every single day. They were millionaires already, living off passive income. And they were coming to hear my mother speak on how they can stay tax-free. And she was the one that was teaching them how to stay in this lifestyle that they were in. I saw that, as I was building this fitness brand, helping people trying to change their lives in a fitness perspective, she was changing people's lives in a money perspective. And it was having ripple effects on their family. I saw children, I saw grandchildren showing up to these events. And it made me realize, dude, my mother is really building a legacy and changing lives here. Maybe if I just learn a little bit of this, I can support her. And so I did. I sat in on one of her consultations and I watched how she sold tax planning. And I said, I can do that. I can go back into my office, learn what you just said, and be able to sell someone else on tax planning too. Because Mom, I know you have all of these strategies here in the office. So I started selling. It wasn't until I ran into my first 7-figure investor that I realized, dude, it doesn't matter how much sales skills I have. If I don't understand the tax code and the knowledge, I'm only going to be able to offer so much to certain people. So that's when I dived in. I got my tax license. I went past just getting my basic tax license and went for my enrolled agent license, which is the highest tax license that the IRS offers. And then I started investing in real estate. And so that's where my passion really grew for becoming an educator in tax. And now I could say that I feel extremely comfortable with the tax code.
That's so cool. Yeah, I love. So you pivoted from physical fitness into financial fitness, right? And I can see how that skill set applies really, really well. You're still teaching people. You're still an expert at your craft. It's just you're teaching them in a different scale in a different way. So, yeah.
And I'm very passionate about it too. The same passion that I was pouring into trying to be this football sensation, and then leaving the football world and trying to be this fitness sensation is the same passion and aggressiveness that I pour into helping people save money on taxes.
Yeah, I mean, you can tell even like on your YouTube channel, which we're big fans of. I mean, looking at that content, you can tell that you are out there to help people. So, yeah, I know one thing you've told me about being like 2 core concepts that you really teach real estate investors about were depreciation and rental losses. Can you maybe define each of those, tell our audience why each of these are such a powerful concept to understand?
Yeah.
Start there.
Yeah. Well, when I was learning about real estate, I almost thought real estate was illegal at first, because when you are coming from a background like I was coming from, where you're not studying tax in college, but then you're now working in a high level tax and accounting firm, and then seeing people make all types of money and not pay any taxes on it, you almost look at it like it's not legal. But then I realized there's this thing called depreciation that the government gives you. And depreciation in our tax office, we call it hidden gold. Now, many people who are listening to this podcast, this show right now, are aware of the word depreciation. If you have a car, you drive it off the lot, it's going to go down in value because that car is sitting outside in the rain, the sleet, the snow, and you put miles on it and you decided to breathe in the car, right? So you can't resell that car for the exact same price that you bought it for. But the same thing happens when you buy rental real estate, right? When you put an asset into business purpose, which means that you have a tenant that you're collecting rents on, the government gives you this tax incentive called depreciation, because now your entire property is business property, which means the flooring, the lights, the nuts, the bolts, the screws, everything that makes up your property now becomes a write-off. And I love depreciation because most real estate investors are already leveraging real estate because they're taking on loans. So if you're only putting 20% down or 5% down, but Karlton, your tax accountant gets to write off 100% of your rental property, you're sitting in a really great place from a tax perspective. So depreciation is one of my favorite topics to talk about because it leads to rental losses, which is what I love to leverage in my office. If I can create losses from real estate while you're still cash flow positive, then we have what's called a win-win scenario.
Yeah. I mean, do you think going through that, are there any areas that especially new real estate investors might get it wrong or might misunderstand those concepts? Just because it's definitely something that everyone's thinking about. They maybe read Rich Dad Poor Dad or a book like that explaining depreciation from a high level. But I'm just curious where kind of the most common pitfalls are that you see typically with newbies.
Yeah, when it comes to like understanding depreciation, is thinking that, okay, if I get a write-off, does that mean all the money comes back to me right at once? And that is the number one newbie, I would say, mistake or topic that comes up when trying to understand your deductions. When you're taking a deduction on your tax return, it is just reducing your taxable income. It's not technically money coming back into your pocket. So although you put down a down payment, let's just say 20% down on a house, and I get to write off that entire building's value as depreciation, I'm only going to be able to claim depreciation against your rental income. And so it's important that we are understanding these topics as you are learning rental real estate, because it can be very confusing if you're not working with a tax professional.
Yep. Yeah. And I think our audience as well, I mean, they do really a combination of wholesaling, fixing and flipping, buying and holding, building a portfolio, possibly even with a partner. Can you maybe talk about the tax considerations that you should be aware of for each of those different types of investing strategies, and maybe, the pros and cons of each of those?
Yeah. I think wholesaling and flipping are probably one of the two most popular ways to get into real estate. But one thing to understand about wholesaling and flipping real estate is that when you decide to go into wholesaling or you decide to go into flipping, you're viewed as not technically a real estate investor, but someone who started a real estate business. Part of the reason why is because the income that you're receiving is not considered passive income when you're doing wholesaling, you're doing flipping. It's considered active, ordinary income. Here's the reason why. If I'm a taxpayer who's looking to flip a rental property, then the goal would be for me to buy something that's either undervalued, distressed, something that needs a little cosmetics or maintenance. And in order for me to really gain profits off of that property, the goal is for me to sell that property to a buyer that's going to pay more than what I acquired that property for. So I'll buy it, I'll put in some renovations, maybe hire some contractors. There is work being involved in order for me to sell that property for a gain. And if you are getting into flipping, you're probably going to hire some contractors. You might even be doing some of the maintenance yourself. And that is active and ordinary income that you are receiving, subject to federal taxes, state taxes, and most importantly, self-employment tax. And self-employment tax is Social Security and Medicare tax. Many new wholesalers and flippers are not aware of self-employment tax. And so they end up parlaying their profits back into their next flip, unaware of the tax ramifications. It's always important that you flip or do wholesaling out of the correct entity structure so you can reduce your overall tax. And wholesaling operates the exact same way. The difference when you're wholesaling versus flipping is you're just not actually ever holding on to the property. You're connecting buyers and sellers together. The income that you earn is still considered ordinary income as well.
Yeah, I know you mentioned like the correct entity structure there as well. That's also something that I know we hear often is like, hey, how do I correctly protect myself and limit my liabilities? So, for newbies, can you advise them on how to think through your real estate investments, and should you put it in an LLC, and do they need a new one every time? Like, what's kind of the general playbook there that you recommend?
Yeah. As many business owners get off the ground, they're looking to get off the ground in the most strategic way possible, keeping the most amount of money in their pockets. But one of the expenses that you have to be prepared for is your LLC expense, because you need to have one. And here's the reason why. In the event that something happens, because God forbid, something can happen with your property. Maybe one of your contractors slips and falls as he's making repairs on the property, and now he's blaming that on you. If you have never taken it upon yourself to separate your business from yourself, then everything that you own is considered liable or at risk in the event of you being sued. So from a legality standpoint, the LLC provides limited liability coverage. You're separating your business from yourself, from your children, their personal IRAs and bank accounts that you might have associated. Now, that's doing one thing, is just establishing an LLC and separating the liability. When your business starts to grow and you start to flip a couple of properties, or you're making some considerable wholesaling income, now it's going to be time for you to pay yourself back out. You'll find out reluctantly that when you have an LLC, that you get no tax deduction for paying yourself out of your LLC. So this is when a lot of LLC owners will look to switch to the S corporation. The S corporation allows for you to take payroll out underneath your own business, which means you become a W-2 employee. But the cool thing is when you pay yourself, your business now receives a tax deduction based on the wages that you decided to compensate yourself with. So it's important to know when it makes sense to switch from an LLC to an S corporation. In my office, we typically have a threshold, and that's right around about $45,000 net business income.
Yeah, man, you're great at simplifying this and making it very very easy to understand. So you're good at what you do, man. I think one thing that's interesting you brought up before, and I've seen you speak on your YouTube channel before, is the idea of, just for newbies in investing in real estate as compared to other investment vehicles, like a 401k, for example.
Yeah.
Maybe talk about how those two compare, and why would somebody choose real estate over something like that?
Yeah. I think personally why people go with real estate, or at least the investors that side with real estate over putting money into a 401k, is because of control. And if you're an investor, then you're investing mainly because you're trying to control your financial destiny. That's the whole purpose of trying to invest. But when you think about it, if you're putting money into a 401k, then you're assuming that you're going to be living off of less money when you retire, because then the money that you pull from your 401k is considered taxable income, right? And on top of that, one of the things that many investors are fully aware of is that Congress can change tax laws every 4 years, which means that if we're looking at the tax code right now and you're putting in money into your 401k, by the time you turn 59 and a half to pull that money out, the tax code can be far drastically different, and the tax ramifications can be far different. So one of the things that we can do now to control our financial destiny is placing our money into things that are more certain. Real estate is more certain because you have control over the investment property and you get to experience appreciation while also claiming depreciation at the same time. Not to mention, you have access to the cash by doing cash out refinances or HELOCs where you're pulling out tax-free money. If I go to pull out money from my 401k, I will have a 10% penalty and I will have to pay that money back. So I don't get to experience some of those same benefits in that rental real estate investors get to experience. And so this is why rental real estate is viewed as a better investment in my eyes.
Yeah, and I think you did touched on a big point there, saying like, hey, things can always change, with different administrations, and the tax code can be tweaked and the rules change. I know today is November 9th of 2021. So, at the time of us publishing this, there could be even more updates, but I like to ask our guests about, the latest news and how they see the real estate market evolving. So can you maybe give us, a quick digest on the latest within tax law changes and what they mean for real estate investors?
Yeah, you're absolutely right. Today's November 9th. And by the time this goes live, things could have already changed. And it's just the truth of the matter is things are ever changing, and it's up to you as a taxpayer to keep yourself on top of the information so you can plan your finances strategically. One of the big key points that the Biden administration had brought to light earlier in the year of 2021 was introducing the idea of having a capital gains tax of 34, 37%, or even having a 1031 exchange tax. What this means is if you are planning on doing a 1031 exchange, which is a tax strategy used by savvy real estate investors to avoid capital gains tax on the sale of an investment property by purchasing another investment property and rolling over your gains from your existing property into your new property that you purchase. Well, if you have gains in excess of $500,000, there's now going to be a capital gains tax associated with doing that 1031 exchange. Fortunately, this has not been approved yet, but this has been proposed by the Biden administration. And so as a real estate investor hearing that, I am very keen on what's coming up with this new proposal that Biden is looking to get implemented. I am very aware that there are going to be some changes that are coming. I just don't know if all of these changes that they have proposed will stick. And so it's important for us to make sure that we're keeping on top of this information.
Yeah, I was curious, I know we're 1 year into Biden's administration specifically, over the next, through his first term, do you foresee any other changes or anything else that you're anticipating? Are you, advising investors in any different way based on how you see the political landscape right now? Or
when it comes to changes that we see coming, I cannot see the 1031 exchange capital gains tax law change happening. Just from talking to other tax professionals, talking to some attorneys and to estate planners, I just don't see that this is going to be one that gets approved. Now, I do feel that the estate laws might change, which could affect investors. So if you're worried about estate tax, right now, I believe it's at 11.7 million is the exclusion. I do believe that the government is trying to bring down the estate tax exclusion from 11.7 million back down to about $5.4 million. So if you have an estate that's over $5.4 million that you're leaving to an heir, now we have some estate planning issues that we need to start figuring out right now. So these are some things that I feel like might end up getting implemented that we should already be putting our eyes on.
Good tip. Yeah. And this has been fantastic, man. I really appreciate how actionable strategies you're giving people and how you can, again, take sophisticated subjects and condense them down to a more simple understanding, especially for our newbies. But we talked about before this that you're launching your Tax Alchemy Academy on December 1st. So depending upon when this goes live, it may already be out, which congratulations. I know that was a lot of hard work. But I know it's a 10-week program with a course and coaching for active investors, and really helps give them a roadmap to legally paying the least amount of taxes based on their current real estate situation.
Correct.
Can you tell us more about that and why you started it, and really what gap in education you saw that you could come in and help fill for people?
Yeah, absolutely. So I was getting to a place where I was getting asked all the time, how do people pay the 0% tax rate? Like, how do you just become 100% tax free? And I had an answer for people. There is a way through rental real estate. And I kept showing people, hey, this is how you need to do it. This is how you need to do it. But I never had a process for it. I never had a process to show people how to qualify as a real estate professional and then accelerate depreciation on their investment properties to be able to pay the least amount of taxes possible. So what I did was I put together my Tax Alchemy course, which is a 10-week course that shows you how to qualify as a real estate professional to accelerate depreciation on your investment property so you can pay 0% tax, not just on the rental income that you're earning, but if you happen to have a W-2 job, 1099 income, if you're day trading, if you're earning cryptocurrency, pulling money out of the stock market, that's taxable active income that I would love for you to be able to offset. And many people are aware that there's only so much you can do, putting money into retirement accounts, giving money to charity to reduce your tax bill. Well, if you can use the losses from rental real estate to offset all other forms of income, then you can become tax-free. So over this 10 weeks, I give exactly that information to the taxpayer in a format that's easy to digest, because taxes should be fun. It should be sexy. It should be easy for you to be able to leverage.
Love it. How do people get involved with that program? What's the best place for them to go?
Yeah, guys, you can go to taxalchemyacademy.com. You can visit my website at www.karltondennis.com to get access. And you can visit us on all social media channels at my name, karltondennis.com or Karlton Dennis.
Perfect. Love it. Well, again, thanks so much for the time today, Karlton. I really appreciate you coming on here.
Matt, it's been an absolute pleasure. To any investor that's listening to this, I'm rooting for you and your success. Keep in mind that the tax code serves you as long as you take advantage of it.
Perfect. Yeah. Well, again, make sure to follow Karlton on all social media. He's putting out great content all the time. And to everyone watching, thanks again. This is Matt Camp with DealMachine, and happy deal finding.